El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. El seminario comenzará en breve. Por favor, permanezca en línea. La emisión está comenzando. Todos los asistentes están en modo de solo escucha.
Everybody, welcome to this afternoon's webinar. This is Andrew Wilkinson with Interactive Brokers. I'm delighted to be on the line here with the guys from Market Chameleon, Dimitri Parjamanik and Will McBride. Welcome to the show. How are you?
Good. Thank you, Andrew.
Great, Andrew. Thanks for having us, as always.
You're very welcome back. Today we're going to be talking about, you're going to be looking at open interest and how to analyze it. Will, are you going to tell us a little bit about today's session?
Well, Dee will tell about the show, but before we get started, why don't we just let everyone know that the disclosure, take a look at that. That's in front of us right now. And with questions, Dee, we're just going to wait till the end. You're going to leave 15, 20 minutes to have questions at the end. And if anything's popping up that seems urgent, I'll try to get it to you. But everyone can just put the questions in the chat. One question I know constantly pops up, Andrew, is if someone has to leave the webinar, how do they get the webinar on IBKR?
If you have to leave during the live recording here, in a couple of hours, you're going to receive an email from us here at Interactive Brokers with a link to the recording, which is on the Interactive Brokers education page under the IBKR campus. Look at the webinars, and you'll be able to find all the previously aired webinars. You can search under More Campus for IBKR contributors and look for Market Chameleon, and you'll get an entire library of all the events these guys have done with us.
Perfect. So one last look at the disclosure, everyone. Dee, you want to tell us what you're going to go through today?
Yeah, so thanks, Will. Thanks, everyone, for joining. Today, what we'll do is first quickly go through a slide that I created to talk about open interest, some key points and answers to questions that I typically get about open interest. And then what we'll do is go to a tool that lets us look and analyze the open interest. So I'll do a live open interest analysis and kind of go through some of the steps to see what type of insights we could get, and how it could help us as a trader. So let's start out. We'll do the slide deck, then we'll go look at it, walk through an example, and then we're going to leave 20 minutes at the end just to answer questions. Okay, so
perfect.
Let's start out with option open interest. We'll talk about what is open interest, how often is open interest updated. I get that question a lot. We'll talk about large increases in open interest versus volume, concentration of open interest, and then we're going to go and look at real life example. So let's start out just discussing what is open interest. And when we talk about options open interest, it's talking about the total number of outstanding option contracts that are open, that traded, have yet to be closed out, exercised, or expired. Okay. And when we think about open interest, it's not the same thing as outstanding shares of stock. Open interest, when you list options, the open interest is zero. Open interest needs to get created through a transaction. So it's a little bit different where you have outstanding shares of stock. It just exists there, represents ownership in a company. Open interest is different. It gets created when there's a transaction. And the importance of it is when we look at the open interest, it could indicate market activity and sentiment by showing how many contracts are open. If there's zero open interest in all the options, then there's nothing going on. Nobody's carrying any type of risk out there. But if there is a significant amount of open interest, different expirations, different strikes, that means there's a lot of interest there. There are a lot of a lot of open positions. that are out there in this particular security. So when we talk about open interest, there's sometimes confusion between volume and open interest, and what is this? How is open interest created? Because I do get a lot of questions when people try to look at the changes in open interest, and it doesn't quite make sense based on the volume that somebody is seeing. So a quick example is when you start out, there's a listed option, zero open interest, and then all of a sudden, there's a transaction. We'll say buyer A, a person, we'll say person A buys 10 contracts from person B. Well, that transaction, the volume is 10, right? You had a transaction volume is 10, and if that's the only transaction, then it will be 10 contracts that are open. The open interest will be 10. Buyer A owns 10 contracts, buyer B sold the 10 contracts, so they have there's an obligation from buyer B to buyer A, from seller B to buyer A. So the open interest and the volume in this case would be the same. But let's look at a different scenario. Like in the same day, let's say just in the very same day, we see buyer A purchases from buyer B. So buyer A, again, purchases 10 contracts for buyer B. And then let's say the same day, the B sells it back to buyer A. Okay, so the volume is 20. So imagine if I bought 10 contracts from Will in the morning, and then I sold the 10 contracts back to Will in the afternoon. What would happen was the volume was 20 contracts. There's 20, the volume will appear as 20, okay, in that particular contract. But since both of us closed out, both opened and we both closed out, by the end of the day, the open interest is zero. Okay, so open interest is actually zero, even though the volume was 20. So that's how the volume and the open interest, are going to be different. There's you're going to see some volume that's different than the open interest. What about when the volume? Here's another scenario. And it's important just to understand these scenarios, because when you're analyzing the open interest and you're comparing it to the volume, you're always going to try to compare it to the volume. You kind of understand what will probably happen. So let me give you another scenario that I buy 10 contracts from Will, right? So Will sold me 10 contracts. I bought 10 contracts from Will, and then that creates a volume of 10, open interest of 10. And let's say later on in the day, the 10 contracts that I sold to Andrew. So Andrew bought my 10 contracts. So what happened is I transferred my risk to another party. So there's a volume of 20, 20 contracts traded on the day. But the open interest remained 10. Okay, because I just transferred it to another person, but now that contract is open between Will and Andrew. So now the volume is 20, open interest is at 10. Okay, because those contracts will not yet closed out. Now, what about a different scenario? What if I buy 10 contracts from Will? So that's 10 contracts, that's volume of 10. And then the open interest is zero because I have the right to exercise. So if I exercise my options, for whatever reason, maybe they're deep into money, I'm going for a dividend, whatever, the volume goes back the open interest will go to zero. So you could see a lot of you could see a lot of volume, and then, you know, open interest still at zero if they were all exercised. So that will also impact the, you know, difference between volume and open interest. So if you understand those differences, the other question I get is, well, can I see open interest in real time? You know, like, you know, as soon as the volume, you know, there's volume, what's the new open interest, and and track it in real time. But open interest does not get reported and calculated in real time. And the difference is that when a transaction, a trade happens, that happens on the exchange level. We have many exchanges. I don't know like how many we have now. I enter like 15, something like 18, something like that. When a transaction happens on exchange, that gets reported to the OPER feed. So all the transactions get reported real time. Open interest is calculated by the Options Clearing Corporation, OCC. So that's not an exchange. That's not, you know, that's not SIBO, that's not Philex, that's not Amex. The OCC clears all these options. So they take all these settled trades. So the trades have to settle at the end of the day, right? They take all those settled trades. Then, you know, they look through if there are any trades. Sometimes trades are canceled. Sometimes they're broken. You know, sometimes there are options that are traded and exercised and assigned the same day. Sometimes you have corporate actions that impact the open interest, you know, like a stock split and so forth. So they take all that at the end of the day, reconcile it, and then tell us the next business day what the new open interest is. Okay, so this is like an overnight process by the Options Clearing Corporation, and you're getting you know volume trades from, you know, one place, and then the open interest is calculated in a different place. So we get that once a day. You get it in the morning, so we could kind of see in the morning what the new open interest is and compare it to the previous day's activity. We see today's activity, but we don't know what the new open interest will be until the next day. Okay, so it's important to understand that, and, you know, I get questions about that often, so I wanted to cover it. And when we look at open interest, you know, there are maybe certain things we want to start looking at. And one is, was there a large increase in open interest? You know, did something happen yesterday, and did that create a large new open interest, that which could indicate potential new positions being opened? Or it could also be important is something significant, you know, like an event coming up that will be covered on this expiration. Is there certain things happening, like a shift in sentiment? So we want to look at something maybe that's more unusual. So we can monitor for large spikes, you know, to gauge this open interest and potentially doing somebody doing option strategies. And again, when we compare open interest versus volume, the volume, it's the total number of contracts traded during the day. That's what the volume is. So volume can increase, you know, it will increase throughout the day. You know, one contract trades and then another contract, that's two, then another, it's three. So throughout the day, it's increasing, right? The volume doesn't go, it's cumulative, so it doesn't go down. It goes up. But open interest, that's the number of contracts that remain open. Okay, that's the big difference here. So when we have high volume and then low open interest, let's say that we had a lot of volume, but the next day we don't see an increase in open interest, that could suggest that there there are people just day trading, getting in and out, or they're transferring positions, from one place, but not a lot of new risk positions being established. Okay, a high open interest could indicate a stronger market sentiment or engagement because you're adding and adding to the positions and to the risks outstanding. Then we can look at the concentration of open interest, where we have different contracts, right? We have calls, we have puts, we have different expirations, we have different strikes, and the open interest could be created on any of those options. It could be, you could have, 100,000 contracts open, but they could be distributed, pretty evenly throughout many different contracts, or you could have 100,000 contracts where the majority of it is concentrated on one or two options. So those are important things to also look at. Like, where we have this open interest, but where is it? What contracts are traders targeting? And those could point to key strikes, right? Key strikes or points of interest. Why are, a strike that's at the money is a lot different than a strike that's very far out of the money. That's a different type of trade. So those are important things when you're looking at open interest and you're analyzing to kind of figure that out. Where's the open interest? What strikes? What expirations? And some of the insights that we could get from the open interest is an example, a large increase in open interest at a specific strike price, suggests, new positions opening up. High open interest at certain strikes can indicate the potential pinning near expiration. So this would be an example where it's expiration, there's a lot of open interest on a particular strike. And if the stock is sitting there at that strike, that there's not a lot of activity and it's getting pinned there from the hedging and re-hedging around that strike. So sometimes that happens as well. So understanding the risks, of relying on open interest. When we analyze open interest, it's not like this one single metric, that tells the whole story. It's not just, one indicator that you could rely on that is magical or anything. It's part of the overall analysis, to better understand the markets, to be able to understand the market and the security that you're trading, that you're trying to create a strategy around, to assess risk, to be more efficient in pricing it. So that's, and I think I'll go over an example of it today where we'll take an open interest and kind of work backwards to see what's going on, what led to this open interest. So context matters, right? How do we get there? What happened? Why? That led to this. It's a lagging indicator, right? Because it happened. You're analyzing it after it happens. There's also uncertainty around the motivation. We don't know exactly what the intent was by the traders when they opened a new position. So it's not always clear. You're trying to make inferences based on other surrounding data. And finally, market conditions. You have to analyze all the other market conditions along with the open interest, volume, volatility, technical indicators, all that you still have to do. So to effectively for risk management, you would want to combine it with other indicators, like we talked about, monitor trends, put things in perspective and context, read the news, earnings, market catalysts, and all. You'd still need to perform that analysis. If there's a lot of open interest in a particular month and that expiration will cover earnings, that could explain a lot of it away, because that would be typical behavior of traders using options around earnings. So in summary, the open interest reflects active positions in the market. It updates at the end of the day by the OCC. Large increases may signal new sentiment or significant positions. Open interest versus volume, it's important to understand that. And looking for concentrations, which we'll look at, maybe we'll try to find one today, to find if there's some kind of, a strike that's particularly being targeted. So we'll go and look at some live examples now. Okay, well, I'm going to exit this, and we're going to go to the Market Chameleon, and I'm going to go over this open interest report. And this is looking at open interest by option contracts. And when I slide down here, this gives us a report of different option contracts. So, these are the symbols. This is the information about the stock. And I'll read this left to right, so then we could go and analyze, pick out an option to analyze where let's do a high concentration of open interest. Okay. And just from left to right, so we understand what we're looking at. This is the stock symbol, the price and price change, and the average option volume. That allows us to just kind of gauge how liquid the options are in this stock. Then this line item lets us know which particular option we're looking at. So in symbol A, this is the March 21st 125 strike put. Next to it, we see this is today's activity. So we're looking at today's activity just to see what's going on today, because when we look at open interest, it's based on prior activity, right? And the change in open interest is based on the prior day's activity, but it helps to look at what was the follow through or what's going on today, right? So if there was a significant open interest yesterday, we could look at the volume, but then we could also compare to, well, what's going on today in that particular option. So in this case, in this option that we just talked about, this put, the last option price was $5.90, which is up $1.20 from yesterday's closing mark. The implied volatility is 31, which is down 3.4% on the day. And today's volume is 67 contracts, which isn't that much. Here, the volume versus average daily volume, this gives us a relative value. So if we compare today's volume, 67, versus, what is the average daily option volume in here, and what percent is that? It kind of just gives us an idea on a relative basis if there's a lot of options trading in this particular stock, in this particular option contract. So now we get to the open interest. Here is the open interest in this contract, 2,165. It changed by decline of 481 contracts, which represents a decline of 18%. So yesterday's volume led to a decrease in open interest, which is saying that in aggregate, there's a closing in positions in this contract. Okay, so people are closing, more people closing out. And this is a change in open interest versus average daily volume to again get a relative value. This is the previous day's volume. So we see what happened yesterday, okay, versus what led to the new open interest and what's going on today. So we could compare all three kind of, side by side. So yesterday, the volume in this contract was 569. There are 21 trades. 33% of those trades were single leg trades, meaning, buyer sold the put. 67% were involved multi-leg trades, meaning it was part of a spread. We'd have to go look, but it could have been a put spread, a time spread, but there's another leg, at least one leg or more to this contract. There's nothing contingent, and the weighted average price of this contract was $3.06. So if we took the average weighted price of all these contracts, it was $3.06. Obviously they're up today. So we could see that from a volume of 569, 480, the open interest decreased by 481. So remember, we were talking about where the volume in open interest can be very different. Right? Some of this could have been just transfer and risk, people open and closing same day, but 481 of those contracts ended up being closed out because the open interest declined. So here we have the total open interest in all the option contracts. So this is 32,769. So that's if we took all the open interest in A, right? Because it has different option contracts, they added up to 32,769.
Monday.
And if we wanted to look at the concentration, we could see that this contract has 2,165 contracts open, which represents 6.6% of all the open interest that's outstanding in this security. So not a large concentration in this one option, 6.6%. So let's do this. Let's look at, I'm going to sort this column. Let's sort it by highest concentration. So you could see that over here, URE, this particular call, September 1917 call, has 711 contracts open, and that represents almost all the open interest in this particular security, 99%. But 700 is not that much, so I'm going to scroll down. And there's no trading, say previous day's volume, there's no trading previous day. So let's skip these and I'm going to keep going. Let's see where the first one.
Al seminario
So
web.
here's some trading.
Ha entrado
4,000
como
contracts.
asistente en modo de solo escucha.
HAYW. You see here, it's $14.19. April 17, 15 call. Yesterday traded 4,018 contracts. 87% of those were multi-leg trades. And out of the 4,000 contracts, we see that the open interest increased 3,924. So almost all that volume led to increase open interest. A significant amount of that volume, right? 97%, something like that. So another thing we see here that all the open interest in HAYW adds up to 11,492. That means all the contracts, different strikes, all the different expirations, everything, 11,492. And 10,049 are of that 11,492. 10,049 are just this one option, April 17th call. Meaning it represents 87.4% of all the open interest. So that is a significant concentration, right? There's a big concentration of open interest on one particular option. So now we're getting this more information. Well, what's going on here? We need to dig deeper, right? It's not the end of the story. Let's try to build a story. What led to this? What's going on around here? Like, is there anything interesting, suspicious, or what is the story behind this contract? All right, so let's go do that. So I'm going to click on this April 17th, and we got to go now and analyze this further. So this is today's options chain, HAYW, and we're on the April 17th expiration. We see here, this is the option, April 15 call. It's 35 cents bid, 50 cents offered. It only traded 20 contracts today. And the interesting part, before we go dig deeper, before we go back and just figure out the story, one thing that just does stick out is it looks like there is a bid in that contract, right? Because look at the contract below. There's a zero bid. April 14 call obviously is worth more than an April 15 call, but there's a zero bid in here. The markets are wide. You could see the markets are very wide, but this particular option, something is going on. The markets have tightened up, and there's an obvious bid here, and an offer, but there is a bid there. So what's going on with this option? Let's investigate further. And there's 20 contracts that traded today, so we could just open up and see that 20 contracts traded for 43 cents. But since the open interest was from yesterday, let's go back and see what happened. Let's go back to yesterday's options chain and see what happened. So I'm going to come back here and I'll go to March 10th. So now we went back one day and we see that here's the 4,000 contracts. And I could see right away, like there's 4,000 contracts traded March 21st. So we know that it increased here March 15th. Let's just take a look at what happened. I'm going to click on this. And here are all the trades. They happen around 322, 312, and on the CBOE, and they're all part of multi-leg trades here, right? All of them are, you could see all multi-leg trades. And the other side is right here. We can see it right here. That's the other side. Right. So looks like a time spread, right? Spread from March 21st. Here we go. March 21st, 14 call to April 17th, 15
Conexión a los datos del mercado perdida.
So that's right now what the
Conexión a los datos de mercado restablecida.
What the options chain is telling us. We know that this increased, right? Yesterday. Here we could open it up. So we know that here's the increase in the open interest, right? Volume 14. So this increased to 10,000. Let's see what happened over here. So this historical, we could see here the volume was 4,000 that decreased the open interest, right? So where did this 4,000 come from? There, let me do this. You see there was an open interest of 4,000 previous day. You know what? Here's a different way to look at it. I'm going to come back here, but well, I'm going to look at if you look on the open interest, 5 days. So this is yesterday's open interest. We could see here it increased 3,900 on the April 15th. March 21st, it decreased by 29.59. So let's go back. We said that this decreased. So what it appears that it was a roll, right? Somebody had these options, March 21st, expiration, closed out of those and rolled into the April 17th, right? That's what it looks like. And if we look at the historical, we look at just the historical, we see that these 4,038 that traded were opened, created on February 25th. Right, so now we have to go back and see what happened. What was the initial trade here? Because on February 25th, there was a volume of 4,038, volume weighted average price of $1.09. That led to increase in open interest. So let's go back to that date and see what happened. I'm going to close this. Let's go back to February 20. Well, what did I say? 28 or 25th? February 25th. So here's February 25th. And here's that 4,038 contracts. So if I click on it, this was the original trade. So we just went back from yesterday's open interest, and we went back and traced it back to February 25th, the initial trade, right? That appears to be the first trade, and then yesterday was a roll. And here it shows that there are lots of trades here with one lots, but this, there's 3,000 contracts, 250, some of it were stock contingent. So just based on the stock contingent, 750, almost 1,000. So just looking at it from that perspective, it looks like on February 25th, the initial trade, which at that time covered earnings, right? February 27th, somebody opened up a position in these calls. It looks like some of it was hedged because there's stock contingent. And that position was held, and yesterday, that position looks like instead of closing out of it, was rolled to the next expiration and the higher strike. Okay, so that's the story behind that open interest, that there's a large position established right before earnings on February 25th. Earnings were February 27th, right? On this 14 strike, it looks like that the price of it didn't change that much. It's still around $1. And it looks like that position, from yesterday, let's go back. Here it is. From yesterday, went from closing out on the March 14th and rolling it up to the April 15th. So now we kind of built the story of, okay, now we have an idea of what's going on in this particular security. So we have about 20 minutes. I'm going to stop there to take questions.
Yeah, we didn't have a ton of questions, but we had one concerning the time. So is there a specific time when open interest is updated? E.g., every day, at what time a.m., context being different time zones, etc.
So there isn't like a specific time that I know. We get it. So we get the open interest ourselves from a vendor that gets it from the OCC. So I don't know if the OCC has like a specific time. I've seen it where we've gotten open interest, and then there's an update to say, oh, there's errors or whatever, and then we'll get a new file. So usually the way we receive it is in a file. It's before the open. We get it around, like, I think, maybe like 7 a.m., 7:15 a.m. But sometimes it's delayed, because it's a file that's created by the OCC. It's not something that the exchanges themselves, because the exchanges don't know the open interest. They don't keep. They only know what's going on their exchange, right? They only know the transactions. Like CBOE doesn't even know. They don't know what's going on. They're not responsible for trades on the PHLX or the NASDAQ, or they're just responsible for the transactions, the trades that happen. Those get settled, go to the OCC. The OCC, they take all that in, and again, they're trades sometimes that are broken. There are trades that are canceled. There are trades that that get exercised. And some market makers, specialists, they could exercise up to like 5 p.m. I think in stocks. So they wait for all that to happen, and then overnight they calculate it. But I don't know if there's always a specific, like, exact time to the second. But you could go to the OCC, the Options Clearing Corporation, and take a look. They have, they also have open interest reports on their website.
All right. So we've got a couple questions came steaming in. So we do have a lot of questions just appeared. Next question is, how do you know if the market maker, I mean, this isn't, do you want to leave these questions to, well, I guess it could be related to open interest. He's asking, how do you know if the market maker is short or long? Obviously, if there's open interest, someone is short and someone is long. I guess his question would be,
yeah.
And it's not just one person, right? It's a bunch of contracts. So market makers obviously would be offset if they were short and long. But some market makers could be short and some could be long, correct?
Yeah, so, right. There's no way of knowing, everybody's positions that way. And it could be that they're even because of the way options are trading and risk is, sometimes being transferred from one party to the other. You could have customers who are on the long side and customers on the short side of it. So there's not like really a way to know the market makers' positions. And like Will was saying, there could be different market makers that may have opposite sides of the position. You could have market makers who are short versus market makers who are long. Like, for example, like, you have competing market makers. So some market makers might have a buy lean, or they're improving the market on the buy side. Some are improving the market on the sell side. So they're doing more of the selling, and the other ones do more of the buying when the order flow comes in. So, because, I mean, these are a little bit wide, but let's say you have 10 different market makers, and, one market maker could be very strong on the bid. while another market maker could be very strong on the ask side. So when the order flow comes in, they could be mostly on the buy side, one market maker, and the different one could be on the sell side. So it's not really something that you could clearly identify a market maker position. Implied volatilities may be somewhat of an indicator, because if you're seeing implied volatilities moving up and up and up, for example, what's going on is the dealers themselves, right? There's so much in inventory that they could just continue selling. They'll have to move their prices higher. So if the order flow itself is overwhelmingly moving in one direction, right? If the order flow incoming into the market is moving in one direction, and you're seeing a lot of transactions that are pushing up the implied volatilities, then you could infer that the dealers are getting short, because then they're moving their prices higher. They're backing away on the offers. Same thing to the other side. There's so much risk at any one level that a dealer is willing to take, or you can't hold out.
Next question. How does the level of open interest impact your decisions? Do you buy or sell based on it alone? Does it impact your strike price decision when viewing a option?
Yeah. So with open interest, just specifically an open interest on its own, it just tells you a little bit of the story of what's going on, right? Just like in our example here, we actually went back and just kind of figured out what transpired, what happened in this particular stock, in the options, and you're trying to build yourself a story so you could get a sense of, okay, where you want to be an efficient trader, right? So as an efficient trader, you want to know as much or more than everybody else, right? That's what you want to know. You want to have more information than everybody else, to be more knowledgeable. And the open interest is just one factor in that. Here it helps us understand the story, where or what implied volatilities are people transacting in. Sometimes you could anticipate better potential order flow, or what might happen next from the existing open interest and how you got there. So it's a piece of information that it could be valuable in instances. Sometimes you have open interest, like if you look at open interest in some stocks, and there's it may not be very revealing because there's too much open interest going on, and it's all over the place and it's equally distributed, so you might not get anything out of it. But sometimes you may, right? So sometimes you may get things out of it, and it's important to understand how to read it and analyze it. So that's with the open interest. If I had to compare, like, if I had to, let's say you deal in real estate, right? You're a professional investor, or in the real estate business. But to be successful, you have to be efficient. You can't be inefficient. Right? You might get lucky here and there, but if you're inefficient over the long term, you're not going to be successful. So I have a friend who's very successful in real estate. If he sits down, he knows everything. He could tell you that average price per square foot, you know, by neighborhood, by street, by condo, the rents, he could tell you everything about mortgages and, you know, where to go to get this type of mortgage, where to go to get that type of mortgage, you know, where to go if you need a plumber, where to go to. So all these pieces of information that he knows as a whole helps him become successful, right? Because when he needs it, he knows where to go, what to do with it, and how to, make his whole operation successful, right? So so there's no one piece of information that led to success or said, oh, well, here, when this happens, you know, rush out, buy this house and do nothing, and it's going to, you know, and it's just going to go up in value. He knows how to manage that risk. He knows how to manage his entire real estate portfolio. And he could sit there and really just, you know, I mean, like even amazed, like he'll tell me about like certain rules and regulations and laws. And he said, I found out this and that, and he knows how to use that to his advantage. And that's similar concept here. If you're trading options, here. You want to know as much as, you know, you have open interest. Well, obviously you want to learn what is it, how do I read it, how do I understand it, and how do I use that in my overall, you know, trading system.
All right. What are some of your favorite
questions? Will? We're still going.
What's that?
Are we the end of the questions? Are we still going?
No, we got a bunch more questions, but I think these questions are going to take us right to 3. So,
okay, keep going.
All right. What are some of your favorite metrics to follow that I guess, what are some of the things you see going on in open interest that make you figure it's worth digging deeper?
So I can tell you, people use open interest for, you know, for different things. There's, you know, even one particular thing, you know, well, you and I know that some professional traders, they look at open interest because there are traders out there that trade inefficiently. And for example, you'll see a lot of trading going on around open interest when a stock goes ex-dividend, or where you have a deep in the money put, and that's to take advantage of somebody's inefficient, because American options are early exercise. And when an option becomes an early exercise candidate and somebody's not paying attention, you know, people can exploit that, the cost of carry of an option. You could also look at open interest to see, you know, how were positions established on a particular line, and what were the fair values. Well, if you're trading efficiently, you want to know what to trade around. You know, what's a good fair value to trade around. So that's also important. You know, big trade sets a new fair value and implied volatility and so forth. So, and it just, even in this example, we see that this was a roll. I also look, you know, you also look for something that's peculiar, like where there's a you know, something when you analyze this from day to day, you'll start noticing something. You start noticing things over time. You have to experience it to view it and start noticing, wait a minute, I've seen something like this before, and I kind of remember, you know, how this played out or what happened next, or, you know, being able to anticipate things, at least to trade around it as well. So if you think that, for example, there's, let's just say that you think that there is, from your analysis, open interest from somebody coming in from day 1, 2, or 3, starting to, you know, sit on the bid, take up the bid, and you see that, okay, then there's persistency, and I see that the options, dealers are backing off. Well, what can we anticipate from that? Well, start looking around the board. If implied volatilities are moving up, there could still be resting orders on the book, right? That implied volatility is still, at a level that looks relatively low, or you think that, given that there's a bid in one option, right? Is there another option I could spread it off? So these are like things that, you start looking for where you're making relative comparisons and evaluating fair values.
All right. I think we're right up against the end of the show, and we do have a bunch more questions. I'll let you answer this last question, and then maybe we'll give a way for people to come over and get their other questions answered on our morning show tomorrow or something. But Barack was asking, do you support index-based options, SPX, for instance?
So not right now. I anticipate I know we've been working on it for a while, and the index options have these different nuances that we weren't expecting from like regular securities. So I do think we will have it soon. I keep saying that, but we do run into bugs. We fix one bug and come up with a different bug. But I think that we will be soon. The index options have enough. When you look at the index options alone, they actually trade out. They have a lot of different trading sessions. Actually, not like the stocks, where you get from regular hours 9:30 to 4, and that's pretty much it. There are a lot of different trading sessions going on in SPX. I think SPX is right now trading, nearly 24/7. I think there's maybe an hour or two that it doesn't even trade. So there are a lot of nuances going on there that we're trying to work out and handle it that we weren't prepared for. But I think soon we will be.
And so we got a bunch more questions. I'm just going to put in the chat because we've only got a minute left. We do a morning show every day on YouTube. It's free for anyone to come to. And it's always good. Dimitri's always showing different things that are available on the site. And so you can come over to that tomorrow and ask your questions. Maybe, D, you can have a show tomorrow concerning open interest. We can maybe carry through this, if that's all right, because there are a lot of questions outstanding. Yeah. I put that in the link for everyone to take a look at if they want to come over tomorrow. But it was a great show, buddy.
All right. Thanks, everyone. And thank you. Appreciate the questions. Thank you, Interactive Brokers and Andrew, for having us.
I think Andrew's going to be back in a sec.
Okay.
I mean, you there, Andrew?
I'm right here.
All right. Thanks for having us, buddy.
Yeah, very welcome. It was great to speak to you guys. And I sent you an email about a podcast.
Excellent.
We'll get back to you.
Perfect.
All right. Dimitri Pajamanik and Wilma Pride. Thanks so much.
All right. Have a great day, everyone. Be safe out there. Thanks, Steve.
Bye for now.